Hey everybody, great to have you back here, Mike Fairborn for Swing Trading. Hope you've had a fun time in the market as of late. A lot of volatility out there. We're going to certainly look at some of that volatility, and folks, we're going to look at some of the indications too of a MACD. There are different ways that traders use the MACD. We're going to talk about a couple of different approaches here, using some of those MACD metrics because it is a signal amplifier at the end of the day. That's what it tries to do in terms of price action. So we're going to dive into that a little bit today. We're going to take a look and see how that could be potentially effective, let's say at the end of maybe a potential signal occurring at the end of what we perceive to be a flag pattern. So we want to kind of net in some of these interesting indicators and utilize them in ways that might tie into, well, swing trading in general, but also into, certain sort of price patterns, etc. So I'll look forward to diving into that with you all today. Folks, welcome to all of you. Did send an early message here. And I'd just like to say once again, good to have you all on board. Joining us early, we did have, welcome to Paul, Stanley, Jay Richardson, as well as Josh, as well as everybody else. It's nice to have you on board. We see Will here, Lola, Scott, and others. Scott, of course, gives us the aloha. He must be coming from Hawaii. If he's coming from Utah, that would be fascinating. Aloha. We don't use that here, but hey, I see it all the time in Hawaii. Folks, any questions, comments you have, throw those in the chat box so we can address those for you. I bring that up because I was in Hawaii not too long ago, hearing a lot of alohas. It was kind of cool. Anyways, hey folks, we're joined in the chat by a good friend of mine, Mr. Cameron May. Just wanted to verify it is Cam. You can follow us both on X, Cameron May CS, Mike Fairborn CS. Folks, let's dive into this right now. Get the show on the road here. Plenty to discuss. Information here is for general information purposes only. It should not be considered an individualized recommendation or endorsement of any particular security chart pattern investment strategy. Now, options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Paper money software application for education purposes only. Investing does involve risk, including the loss of principal. No guarantee that execution of a stop order will be at or near the stop price. State that again. No guarantee that an execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results, and dividends are not guaranteed. We do look at futures from time to time in this class, and wanted to just state here, futures and futures options trading does involve substantial risk, not simply for all investors, but we're just looking at the charts. But anyways, add a few disclosures just to show you there so we can look at those charts. All right, back to our general scenario, folks, our general setup that we oftentimes look at in this class. We like this deck of slides because it oftentimes will give us a pretty interesting illustration of a visual that we'll see on the chart of basically a 3 to 14-day move on that chart. We're really looking at these time frames. We have actually a couple of them here. One's highlighted as a bull flag up top, an upward move, a consolidation, and there it is right there. Therein lies your 3 to 14-day move. We're really just trying to capture really sort of the meat of the move of the trends, because oftentimes trends are divided into ebbs and flows in the market. We know that. Markets tend to they ebb and flow a lot as they trend. And we're just trying to capture those interesting time frames where indicators, price patterns, volume, which might be a totally different dimension. We've talked a lot about volume in the past. Whatever the case might be, we're looking at, and whatever might resonate with you, we're trying to spot maybe those lower levels so that we can, in this case, a bull flag pattern, maybe capture a move coming up. Now, there are a lot of different details, as you can see onto the left-hand side of the screen, that do relate specifically into that bull flag. You get the strong upward move followed by a very mild consolidation. We tend to look for a lot of that in this class because it's just in general, you're finding a strong upward trend and a mild consolidation. Those two combinations will very frequently mean, to a lot of traders, the possibility of a trend continuation, right? You'll see that. How does the trend get higher? How does it get higher? Well, it's got these moves that are a little bit bigger than the pullbacks. And if you have enough of those moves that are going up higher and enough of the pullbacks that are not pulling back as much, what are you going to get? You're just going to get higher highs and higher lows over time. spotting flag patterns, spotting other indications maybe that could indicate the possibility of a start of a move could be of interest. We do have one of those to talk about today, and that is going to be the MACD, moving average convergence divergence. Been thinking about this one quite a bit. Some of the metrics that are used and how the MACD can and oftentimes will give an interesting indication just as you might be nearing the end of what you believe to be a price pattern, a flag pattern in this case. It could be head and shoulders patterns, it could be triangles. We look at a lot of those here as we kind of overlay that swing trade time frame. But it's going to be a big discussion about the MACD. Before we get into that, though, we got a few more things to discuss. And let's look at some markets right now and get the show on the road. I've got a few things just to clean off my screen. There we go. I think we're all set there. I'm just going to close this and close that. Okay. I was going to show you guys a little screen here, a scan in just a second. But looking at the markets right now, we had been talking about some of the seasonality that can occur in August. We got a little bit of an oversized move in August where we kind of came down from those highs in August. Sometimes as we talk about seasonality, we talked about it last week, the week before that. Sometimes you might get somewhat of a sideways range, September maybe a little bit lower. It's kind of one of those weaker times within the market, times of the year. It doesn't have to be, of course, anything can change. But we have been running up sort of in a seasonal fashion through the end of July. Let's see what happens in August in here and see what else we get in terms of potential patterns and different sorts of scenarios. Now, we had been seeing quite an interesting move. Here's the NASDAQ real quick. Very, very similar to it. Prices breaking down over here. But I did want to take a look at a couple of our trades that we'd put on fairly recently as we look at those right now. We did have, as I go over and look at these right now, over the last 10 days, I was out a couple of days last week, but we got knocked out of a trade here on JBL. JBL is still into a sideways range. Let me show that to you right now. GPC as well, but here's JBL. JBL, this is over at least last week we were looking at. And let's go ahead and just highlight that real quick and just show you that, yeah, we're still into a sideways range over here in that JBL. So what we did is we thought we were breaking out, but we did test a little bit lower and we broke into this lower range. It knocked us out of those 25 shares. But you'll notice something. Are we still holding into a flag pattern? Indeed, we are. I'm going to kind of plant a little bit of a seed here because we're going to utilize this on some of our newer trades today that we're looking at. But look over here with me on this JBL. Notice that you're getting a couple of different MACD lines. And where are those lines showing right now? They're actually quite a bit apart. And there's a range in between those two lines. Notice we don't have a crossover yet. Sometimes you get that classic crossover. And by the way, I'm going to talk about this in detail in just a second. But the 12-26-9, a classic crossover right there, where you're getting the mainline MACD crossing above the 9, which is just an exponential moving average. Then it's a very fast moving average. It's intended to be fast. What we're looking at with the MACD actually here, it's a sensitivity indicator. I'll get into that in just a second. But you'll notice we're not getting that yet over here. And this is one thing I was kind of looking at in these consolidations. What we're going to find is this range between the signal line and the mainline MACD, that is the 12-26 line, they tend to narrow when prices might be on the verge of maybe moving higher. Good case in point right through here. They tend to narrow and tighten up right through here. It's just another sort of a confirmation, sort of a confirmatory indication that some traders might want to use. It can confirm. It doesn't have to confirm. There's no indicator that's perfect. But we're going to get into that in a little bit more detail. This was one of our trades, though, that we had. And by the way, you know what this reminds me a lot of? Is our good old trade in DE, where that flag pattern just kind of extended to the side for a while. What do you see over here on DE? Any changes with that MACD? You look over here, you say, Mike, there's not a ton of changes. In fact, the MACD suggested a long, extended potential sideways consolidation. That's what the price action was showing us, kind of on a second level of sensitivity. Look down here with me. We got close a couple of times, and that was right near the bottom, but we never actually crossed until just now. Just now. Our first cross was about right in this range. And in fact, if I move over a couple of bars, the actual range occurred. Let me just change some colors over here. The actual bounce, it's funny because the MACD is a little bit different. You might get an early indication it was closer to this bar right here. Now, have we broken out yet? We have not. In fact, a lot of these have been kind of pausing right around earnings, and we haven't been getting our move yet. One of the companies we looked at last week, here's a great example of that. LDOS, pausing around earnings. You see the flag pattern? We looked at this guy last week. Earnings came out and a bounce. This is one we can certainly look at, but we're seeing still a number of companies that might be kind of pausing quite a bit. Remember, Caterpillar ran big. DE kind of in the same area. We'll see if it can break out of its flag pattern and move, but we are getting kind of a second level indication with that MACD crossover right there. And by the way, look over here. Are we still resting on prior highs? We are. So this is one we could look at too for a trade today. One last aggression, and then we'll continue right into the MACD. But what else could have worked, you guys, when we look at a trade like this, and prices have been flat through here. Now, buying shares didn't do very much in that flag pattern, but we've illustrated this strategy a few different times. But what might have worked? Sometimes selling, we sold some puts previously. For example, if it holds above a particular strike price, traders would anticipate if prices are holding above there, they might just be collecting premium. And that could be something that could potentially be collected month after month after month, as long as you're staying into a sideways channel, right? We've kind of done some comparisons on this before, but we're going to have to utilize a little bit more, going forward here, maybe some of the MACD characteristics in terms of getting some additional indications. So let's pause right there. I'm going to take just a quick look at the chat, and we're going to dive heavy into our MACD as we go into this. All right, so I think we're good. Oh, hey, by the way, a quick question comes up. There are a couple of different indications with the MACD and the MACD histogram. I like the two lines because the two lines illustrates exactly the core of what the MACD is. The core of the MACD, and I'll talk about that, then let's talk about the histogram just after. It'll make more sense, actually. There's a little bit more to that histogram. But a couple of ways to use this MACD, which I do want to talk about. I think it could be very, very interesting for us to look at in this class. So first off, with that MACD two line, what is going on with that MACD? You got the 12, the 26, and the 9. Now, we're really looking at two moving averages here, and both of them are exponential. We've got the 12 and the 26, which is the default. There is another set of parameters that are also used, a little bit shorter, and you could test these out. The signals will come quicker. And actually, it's funny because even as I was planning this class, I wasn't planning on going to the 8 and 17, but Carol had an interesting question about that in one of the morning classes. There's the 817 as well, much, much quicker. That's a very, very fast moving average, okay, and the 17 shorter, okay. This might be, in terms of the swing trade, like a flag pattern, you could test these two. This one, it may fit a little bit better because it gives the flag a little bit more time to develop, as opposed to this, which might be an early signal, but there's just going to be there's going to be more fake outs associated with it, perhaps. Okay, so what's going on here? Let's put these on the chart as we do this right now. So we can see, we'll just break this down. So let's do the simple moving average. Excuse me. So used to those. The exponential. If I could put in, there we go. Exponential moving average. And I've got a couple in here I'm going to put down. I'm just going to do them both individually here. There's actually we don't want the 9. We're not looking at an exponential 9. We're looking at a moving average of a 9 on the convergence and divergence of those two lines. So let's do this first. So here's our 12. Okay, we'll put that as a 2. And then here is our 26. Change the color on that. We'll make it a little bit thicker here, and we'll just go to a green. Now, what is happening here? You can see each of these taking place here. Now, this movement between these two lines, there's a convergence and a divergence of the 12 and 26. And what we're really looking at here is when one of those moving averages goes above the other, okay, you're going to start to see our line down here, our main line MACD, move up or down. Now, it's an amplifier because we're actually using a crossover, a moving average crossover, and we're using it on an exponential basis. So what that does is if prices are moving and they're moving consistently enough over the 12-day time frame and the 26, and remember, we're looking at the 12 and the 26 moving up. So the 12 breaking above the 26. That's what's going to control our main line MACD. It's also referred to as the value line MACD. I've heard that phrase before. This is simply the other moving average. The 9 is just simply the moving average on top of these two moving averages that are converging and diverging as they cross back and forth. Okay, that's what's ultimately going on there between those two. Now, when we look at that, it's a signal amplifier. The same, they actually use MACD technology in radio stations as they literally amplify signals. I'm sure it's a little bit different, but it's the same sort of concept here. And we're looking at these levels. Now, one quick note on this, and I'm going to show you this. I'm going to take this line off here just to kind of highlight this here for us quickly. If we take off the 9, I'm just going to put it down to a 1 so you can't really see it. It's just going to replicate, mirror everything. This can be used as a divergence line as well. So in other words, are we getting higher highs? Or are we getting higher lows from the recent level? Case in point, this one stuck out to me. Look over here with me. Do you see this low on the MACD? Well, we made a similar low right there, but notice where the MACD is. We've got a positive indication here. The chance of that signal line crossing over now is much, much higher because we're getting a positive divergence. Everybody see that? Higher low over here. This is a lower low, but look at prices. Prices are virtually the same. In fact, it dipped to the same lower level here. Do we see another divergence occurring through here at all? Terrific negative divergence right there. Low, low, low to basically a similar low, but look how much lower that MACD went. It's an indication of weakness. Now, we're not looking at an indication of weakness because we're looking at an upward trend over here. And so we're kind of relying on maybe a divergence to occur, but certainly a crossover of the line is really going to be a key focus. Okay, so let's talk about that a little bit more. Let's break it down and look at a few of these right now. By the way, we have this stock. We're still in the last one. Just as a quick note, we do have, let's see, where are you? So it's a GPC. GPC was the trade that we did last week. This was a breakout of an extended downward move over here. Let's go ahead and look at, let's do this. I'm going to show you. Let's put the MACD back again so we can see that right here. And we'll kind of highlight this. Back up. Here is the average line. And we don't want the average. We want the average to be back to a 9. Okay. So I'm going to show you as we look at this particular stock in here, we did get a crossover early and we got an earnings confirmation and prices went up to a new high. It's been a good follow through day today. How are we doing on this stock? I know we're down probably a little bit from where we got in at, but we're probably fairly close. We're down to $19. Okay, our potential exit level is down here. Our target is up high, just so you know. That is the extension, the full extension of the move to the upside here. We're still in this particular company, okay, or this paper trade. We did get a crossover on that MACD line, just looking at it here in hindsight. Now, I want to overlay. We'll use just a different stock example to show you this. Let's just show you the MACD. This is the standard, well, histogram and what that histogram shows. Okay, so what the histogram is this shows really, and it could be, I mean, of interest as well, because what you are getting, the histogram itself is showing the main line getting closer and closer to the zero line. Where's the zero? The zero is the crossover right there. That's what represents zero over here. When you get these big spikes over here, it could be of interest. I mean, it's showing you that there is strength. You're actually getting the 12 really outpacing the 26 moving average to the upside. And that's where you're getting your signal amplification, is the way that the indicator is lined up and how it's intended to do. And are you getting the big moves? Like right now, how are we doing on that? Yeah, I mean, that was a fairly big spike. We're seeing some follow through here. Notice the big range. Now, I know we dipped back down again, but hey, maybe the stock, I mean, it's still kind of steady as she goes right now. We're making higher highs and we're making higher lows. Okay, now let's kind of pause on that a second and just see. Yeah, there are some classes that do focus on earnings, but we're really just tying it into technicals here. But a lot of times we looked in this class, Jack, over prior classes that have, you know, how they've done over earnings in different sort of industries and stuff. I think actually there's a class tomorrow I'll be teaching for JB, and that's maybe a great topic we could look into, our earnings, since we're in the midst of it. That would be the growth and value class, just as a side note. All right, so let's do this. Let's pop back here. These sessions, by the way, are each week. They're weekly, and these do go through a process of being recorded here. All right, great. Okay, well, let's do this. I'm going to take a look, and we are going to just, let's narrow some of this, take some of these off right now. And what I'm going to do is we'll take that bottom one off as well. Histogram, and let's take a look at some of these other stocks and how they've been faring just in the market right now. Okay, here is one I want to take a look at. I want to look at some companies today that are actually past earnings. There's Nike right here. You can see the breakout of Nike, and over here, earnings, obviously, we broke out higher. And here is a bit of the consolidation. It was a little bit of a fake out. Now we are making higher highs and higher lows in here. But, you know, we're really not getting too much of an indication. I don't even know, you know, it's kind of a little bit of a down day. The stock's struggling a little bit. But when you are making sometimes these higher lows in here, can be a positive indication for the possibility of a follow through. If you start to make new lows, I think sometimes that can shift the dynamic. You're just not getting the strength of the trend the same way. But in looking at this, let's just scoot on down here and look at the MACD. So in terms of potential confirmation, that crossover is not quite there yet, and it just suggests maybe waiting until that occurs. These ones are a little bit closer. Here is Win. Now, some of these are closer. This was actually a little bit wider as well. In terms of that flag pattern, I'm going to back up a little bit because I did want to show you this longer term. Okay, that's right around 105, resting near prior highs. Okay, so this one does have earnings still to be mindful of, right, that we need to watch. But notice over here, we've been coming back down to this level, but the widening, the 12 is outpacing that 26. Too much still for the possibility of a reversal. Now, do we get a big bar that comes in here, like a close above the high, the low day? That could signal this. But even with this amplifier, still nothing yet. Let's park it back right to there. What do you see over here that's different from what we've got up top? One thing is we did not make a new high over here. It's still in a tighter consolidation range. But this was clearly a scenario here of a higher low, higher low, higher low. You got the signal there. And after that signal, actually, there was kind of some acceleration. That's what we're kind of all about in this class, is trying to capture really the start of a bigger move. And that's where a bigger move could happen when we get that crossover, because we are, again, seeing the acceleration of those two moving averages. So could we get a 3 to 14 day move? Well, we got to move over there. Let's just see how big a move that was. It was, let's see, our crossover was right there. So we ran, fits right into our range. Look at that, 13 days. It was a 13-day move right from that MACD crossover. We don't have it yet over here. How about this one here? There's a 14-day, 15-day after earnings as well. MACD. The difference between where we're at here and here is clearly the trend. Higher highs, higher low established. So in this case, we might have the trend on our side. That's win right now. Okay, if we can get that to occur. Let's do this over here. Let's look at a few more of these. AME, still looking at sort of a flag pattern resting on a prior high. Just looking for that additional confirmation that a trader investor might use. Okay, now with AMETEK, we got past earnings. We beat earnings. And I think we beat earnings over here as well. Yeah, 170, 167. A lot of times when you beat and you guide higher, there is the possibility of that follow through. Now here is the weekly chart. The weekly chart's been pretty good as we reference sort of a multiple time frame. Higher highs, higher lows, really resting at that 50-week moving average as well. Holding that range. Okay, let's just take a look at that MACD now. Let's just sort of count a few of the things that we've got here. Do we have a stronger upward move here? It appears we do. Have we held that range? Got to say yes. We really didn't break. We didn't close below that 175. Again, it might have been pausing to see what would happen around earnings. We got the big breakout there, and there is the MACD crossover check. Now, we can reference this with our other indicators as well, but I did want to display this one today. And there is the breakout. We're above that range right now, kind of on a little bit of a pullback, but nonetheless, we're seeing some widening here. Did pull back today clearly, though. All right. We actually saw some of that happen over here when we got going too. Breakout, off the bottom, pulled back, and then it kind of rallied a little bit. Not unusual to see a pullback here. So this is what we could actually kind of look at here and see, maybe we would place a trade on here and just kind of watch this one. I know it might not be the ideal time, but I will say this. It is resting. It bounced off a prior high here. I know we're pulling back, but the idea here is that price pattern follow through. So let's take a look at the price pattern follow through. Just follow me down here. Quickest way to get to that, folks, bottom right-hand corner. There it is. There is our drawing tool. Let's click on the Fibonacci extensions. Let's measure the pull of the flag, and then we can place a paper trade on this. So from the low to the high, and that resistance held very nicely across the whole board. Now we might have an earnings. Some traders would say, hey, I got the earnings indication I wanted, maybe a MACD indication, which was fairly, doesn't happen all the time. And now what does that price pattern look like? Okay, up above 210. It's not too bad. I mean, that's a fairly bigger move if it were to hit that run. Let's see. That's going to be somewhere about a move in the range of from where we're at right now up to, if it did a full retracement of that, that's still about 14% or so, 14 and change from that level to the upside. So let's look at that. You can see over here too. Does it match sort of the time frame that we might be looking at? Maybe after a breakout, 3 to 14 days. Yeah, it could fit in there. So let's take a quick peek at that in terms of a trade here and see what we've got. We know we did already take out the prior high range, so we're really looking now. Let's see, that's a 212. I'll just remember that. Okay, let's take it out. Remember, we've had our T1 already. It was kind of strange on these really tight bull flats or flags. You can hit your T1 target, which is just the high of the range off of the pullback here. So you got your pullback, As soon as you hit that, it looks like we actually hit it over here as well. We reached the T1, but that T2 target, which is the full extension of the pole of the flag, P for pole over here, from the low to the high, all we're simply doing is just getting that extension from these lows to that range. And that's the price measurement using those Fibonacci retracements. Okay, so let's set it up, and we can look at a few different things too. But in terms of a potential exit level using a stop, we could look down here and say, well, could it retrace back to the lower end of this range? It could. We probably don't want to see it make a new low after it made a new high. That would be a bad indication. But we can give it a little bit of room. And if we were to say, because a lot of times we'll say, well, what was the last low? Sometimes we'll put our stops there. And again, a stop's not guaranteed to exit at the stop price itself, right? When it triggers, it competes with other market orders. But if we had a range in there for our stop, and let's say we're purchasing here, so that's the range to the downside. So some traders would say, well, that's the potential risk level at that stop range. Well, what about the reward? And how do these measure up a little bit? If we're buying here and the reward using a different set of marks is here, is that at least a 2-to-1? 2 reward potential. We're just looking at the retracement versus 1 risk down here. So when we're right, we want to try to capture more. It looks more like almost a 2.5, perhaps. I'm just eyeballing it here. Maybe a 2.5 to, or maybe a little bit above a 2-to-1 reward risk ratio. Just kind of a quick visual. Of course, we could do the math on that. We could get it very precisely and find out exactly what that level is. This is also a consideration too. Why this would be important is, where are we at in this trend? If the trend is all the way up here, sometimes the risk is equivalent to the reward. It's like a 1-1. Now, you might have a higher expectation of it meeting the upper level, but it's sort of nice to be able to have less, potentially less risk relative to reward based upon the trade that you're establishing here, at least in terms of what you're seeing and what you anticipate to expect. Okay, so we've got a couple of different levels. We've got the 212 on the upside. I'm going to use the 175 on the downside to give us a general idea, general setup here. Here is the setup. It's 185. So let's just do this. We're going to do a buy custom order with brackets. I'm going to scoot down here, and what we'll do is I'm going to go into a 50. We could do a 50 or 100 or whatever. It's a little bit higher price stock, so a lot of times we'll do that. Let's just go ahead right off the top and just put in the good tail cancel on both of these. Here's our upper limit, right? That was the extension to the upside. That's our limit, stop limit order to the upper end, and it was 212 roughly. Just use 212 for our example here. Our example trade, and 175 below. Okay. Any questions on this? I'll go ahead and take a look at the confirm and send here. We're getting it in, with less than 30 minutes in the trading day. Like I said, it might not be like in the most perfect spot, but I want to put an example trade in. But it is pulling back, maybe resting on a prior high. So we'll see on this, but there's your buying power effect, about 4,600 and change. You can see there. You've also got just some confirms. You got buying here, you're buying at 50, your sell, at the limit on the upside, on the downside, all within that flag pattern, right? The T2 target. That's what that order is setting up, with that target up here and a potential exit order down below, our exit. But it's all within that pattern, and getting a little bit of that MACD metric on our side here, where we're getting more indications that the pricing could be right. In fact, we're getting the breakout too. Sometimes you get the MACD a little bit, you can get it before the breakout. This time it kind of coincided with it. It was interesting. There we go. So this is one we wanted to put on. Let's look at a few more here too. TDY. Okay. What are you guys seeing on this? You might see the pattern up top here too. Many of these are highs. They're breaking into new highs. They have an extension of a high as well over a longer term range. In fact, let's just quickly flip on a weekly to show you we broke out above a weekly range. And on an interesting aspect, this was sort of a cup and handle weekly. Do you see it? The weekly cup and handles might have their own sort of price projections as well, but clearly above that 50 moving average, weekly moving average, and extending higher here, kind of into this is the weekly, into a tight little, do you see the weekly flag? It's a weekly flag as well. Tapping into a weekly chart here, but that's so easy to see, right? You just got like 3 bars going sideways. It's holding a lot of the range, in other words, but there's the weekly, or the daily. There it is. How are we doing over here? Not quite there. When did we, I love doing this kind of stuff because it just kind of trains your eyes the more you come in here and take a look. Let me go back, just showing you what we look like on this pullback, because I'd have to say too, this looks a lot like a flag pattern to me. There was still a long-term upward trend, right? There is your pole. It's much higher. You held the range. Where did we ultimately roll over? Let's just draw it over here and just see when that trigger came using those standard MACD defaults right there on that day, on that bar. So what are we seeing here? Let's step back and think about this for a second. Here's the pullback. So here's the move. Let's get this color coordinated as well. I'm going to draw this in green. So we've got this, the run up, and we've got a bit of a pullback here. But then as we're nearing sort of towards the end of the flagpole, some red, a little bit of green, but we're flattening out here. So it's just kind of a little bit of red, 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 red. What do you see? What's the difference here? What it's actually kind of showing that we can visually see right there, we're actually just getting a big breakout bar. Now, how many of you guys would look at this and say, I missed the trade? I've done that before. That's why I say it. Because in the past, a lot of times I'd like to get it down here. And if I don't get my signal, I say, dang it, that's my signal. It was flattening out. It made a new high right there. But when does this guy really start to get moving? Didn't really miss that trade. It's actually the start of the run. So for the longest time, I'd see these and I'd say, oh, I had it. I just missed it. I wasn't looking at it. I might have got my signal. I might have looked at it today. It had a bigger move, but boy, and then I'd regret and say, see what I could have done? It was down here. I saw the bottom and I just missed the whole thing. Look what it ran. I should have recognized this. Well, what was I missing? Maybe the big green candle right there. That basically this just helps me kind of spot that says, wait a second, you might be on the verge of a major sort of a range where these lines are really diverging. The 12 is now really outpacing the 26. When that happens, basically what it's showing is you might be getting a lot of price action on the way. Price action. That's a lot to spell out with a mouse, by the way. But a lot of price action could occur on the bigger move there. Folks, that was I know we're looking in hindsight, but when that crossover happens, that's a big bar. And that bar is a lot bigger than this bar, than this bar, than this bar. It's bigger than all those bars. We're getting a bigger bar. Maybe another indication. Not to say that I didn't get the absolute best price, because I'm saying, Mike, I could have bought 15 points lower. That's all in hindsight. That's what I'm thinking. But now I got to buy over 500? So what? So what? The market's open every day, right? And there's all these moves that are occurring. That actually is where prices actually began to run. That's where the big move occurred. And if I'm not mistaken, let's look over here. Off the bottom to the top, Can I eyeball it? I don't even have to. Look at it. It measures perfect. 1, 2, 3, 4. It ran up, these are in 20 increments. Let's just see it. So it's right off the bottom there. About 1, 2, 3, 4. Did it hit our price target? Beautifully. Right there. I can comfortably say that that is very, very close to that price target range. Where did that really begin to pick up? It wasn't down here very much. That's really the meat of the move. You guys, look at this. How many days? Are we talking swing trading in this class? We are. We do swing trades, and just from this bar, from the MACD signal, 16 bars. Yeah, we could stick with something like this on a 10-day moving average too. Potential exit after a strong move. Just, exit on the bottom, a break below the 10-day moving average, something like that as well. Hopefully that's resonating with you guys. Yeah, so that's what I did for the longest time. And I'm just like, it's just a good thing to share with on this stock because it's like, I get so caught up and I'm like, look at that. It's a double bottom. Boom. That's where it actually runs. But this can help us kind of spot that. Let's look over here too. Consolidation. Where's the real break right there? Look at it. Bounces off the MACD. I'm even looking at the bottoms here. Look at that. Some people would say, I missed this whole range. It moved up 20 points and I'm getting in here. But after that, it ran up 20, 40 in hindsight, right? Last one, and we'll wrap it up. But hopefully, we can start looking at some of these. Look at this one now too. Still in consolidation. You see the strength of that trend. Breaking highs over here. People are going on Carnival. Look at this. Pop up here. Sideways. We might have a sense of what to wait for here. This was post earnings. So coming back to what Jack said earlier, maybe waiting for an earnings confirm. That's a beautiful gap right there too. That's when it crossed over right there. People say, I missed it. I should have got in before earnings. Well, maybe you could have a trade in there where you have a tight exit as well. So anyways, folks, if you found this informative, helpful, folks, and you're getting value from these discussions, smash that like button as well as subscribe. It's been great to have you guys here today with us. Feel free to follow me on X. I'll just post that in over here. I'm going to take a look at that. I don't know what I'm on there. Oh, yeah. That is something else that I posted. Now, I'm just going to post this into the chat if you guys haven't already followed me, but love to have you guys on board if you're not already, folks. Thank you, Cam, for your help as always, and it's been a pleasure being with you, folks. Have a fantastic rest of the day. We'll talk about the MACD more going forward, and look forward to future discussions, and see you next time.